Good day, ladies and gentlemen. Today I want to teach you the easiest SMC scalping strategy that you can ever use. Okay, so this strategy is very simple. It is perfect for beginners because it's easy. Like I said, very simple. You don't need any complications. You just need only two things. Okay, so what are the two things you need in order to execute this strategy? First one is BOS. You need to see a break of structure. Once a break of structure has happened, you are looking for an FVG. Okay, very simple. So it's BOS plus FVG. There are other models where you have BOS plus order block, that's BOS plus OB, but this is like the easiest because it's very easy to spot. BOS plus fair value gap. Okay, so how does it go? Very simple. I have a few examples so you get to understand what I'm talking about. Okay, so look at this one. This is the very first example I have for you. As you can see, this structure, which is a low, was broken with displacements to the downside, leaving behind an FVG. FVG simply means fair value gap. Okay, so if you don't know what fair value gaps are, you can check my videos on fair value gap. Just go to my playlist. You are going to see videos on fair value gap. So right here, I have a fair value gap here, which I'm trying to draw out with these two horizontal lines. Good. As you can see, there's a gap in between, and what happened, price will always trade back into that gap, okay, and give you a sell trade. Okay, so you can see we had a sell trade right here in the downwards direction after market tapped into the FVG. So you just need a serious displacement that breaks structure. That's what you are looking for. Serious displacement that breaks structure. Once you've seen that, quickly check for an FVG, then you draw your FVG. Sometimes you could have more than one FVG. Okay, so all you just need to do is just follow it up until you get to the FVG that is closest to price. Then you now ask yourself a question: are you conservative or are you aggressive? If you are aggressive, the FVG, the fair value gap that is closest to where price is where you should take your trade if you are aggressive. If you are conservative, the FVG that is a little bit far from where current price is where you should take your trade. Okay, so that implies that if you're trying to buy, then your FVG should always be in discounts if you are conservative. So even though you have other FVGs that formed, you want the one that is in discount below the 50% of your of your Fibonacci. Okay, so let me not confuse you. Let's just go and see some other examples. I'll also show you the example that has to do with you being aggressive or conservative, so you get to see a clearer picture of what I was trying to explain a few seconds ago. Okay, so this is another example. We had a break of structure to the downside. Look at this. Structure was broken to the downside, and then an FVG was formed. Okay, I think this is the one I explained, right? Okay, no, this is different. So it looked alike. That's why I was asking. History repeats itself. So structure was broken to the downside. This low was broken to the downside, leaving behind an FVG, which is what we have right here. Okay, between these points and these points. Okay, so what happened? Market traded back into it. Was that the FVG? No, I think that's an higher FVG. Another one formed below, closer to where price currently is, and that's this one right here. This part of what I was talking about. You can have several FVG form. Okay, so the one that is closest to price is the one you should take your trade on. As you can see, this FVG that is above here was not traded back into. Price traded back into another FVG that formed that was closer to where current price is and gave us a beautiful sell trade. Okay, so this is the second example. Let's go to the third example. Good. So this example is where I get to calm down and really explain what I was talking about in terms of you being aggressive and you being conservative. Now we had price break structure here, so I'm slowing down now. We had price break this structure. This is like a swing high. Price broke it aggressively with these impulsive candles, leaving behind two fair value gaps. Let me move these horizontal lines. This is a fair value gap here. As you can see, the wick of this first bullish candle did not intersect with the wick of this third bullish candle, leaving us a gap in between. But instead of price to come into this gap and give us a buy trade, we had another gap form at a higher level right here. Look at this. This is another price that formed, another FVG that formed right here. So now you have two FVGs. Question is, which one are you going to enter your trade on? If you are an aggressive trader, you know that definitely price will respect, the FVG. So you might take your trade here. Okay, as you can see, with a big bearish candle, price returned to the FVG closest to current price action and gave you a reaction which you would have made money with. You can see a buy trade was in order right here, and it played out, putting you in profits. But if you are conservative, you would want to wait for price to come down to this second FVG before you take your trade, because that would give you a higher risk to reward ratio, and you don't want to enter this one because you feel it might get broken while price is trying to come back to this other one. Okay, so you are conservative, you don't want to jump into the trade just anyhow. Okay, that would have still played out. But let me just tell you something: if you are always conservative, sometimes you might miss some trades, because if the bullish momentum is very, very strong, if it's prices down into this first FVG that is closest to it, it can just keep going up without ever coming down here anytime soon. It could be in several weeks before it gets down to that level. Okay, but in this scenario, we had price tap back into the FVG. So you can see price came back into the second FVG, went beyond it a bit to tap into an order block that is below here, then gave us an explosive move to the upside. Okay, so it gave us an explosive move to the upside. So that second one would have given you a higher reward. Okay, so the price went a little bit past the FVG and came to this particular order block. Okay, so that's basically what played out. So I hope you understand what I mean by you being conservative and you being aggressive when it comes to entering this trade that has to do with a combination of break of structure and fair value gap. All right, so if you got any value, please subscribe to the channel. If you're a new viewer, please subscribe and turn on the notification bell. If you would like to get the master strategy, I'm gonna leave a link in the description where you can actually reach me through. Thanks for watching.